welcome to today's episode of Derek Invests. I'm your host, Derek Miller. What we're going to do today is earnings for Thursday, August 1st. We're going to take a look at APD, Amazon, Apple, APTV, and I can't, Ball, CI, and ES. It's an energy company. I can't remember what CI is. Doesn't really matter. What we're going to do is we're going to take a look at the setup. What we are really interested in is institutional footprints. Are there institutional footprints? Is there a price target that we can look at here and have an idea of where price is going in these individual positions? And also, I promise to do a breakdown of the NASDAQ today. I will probably do that in an episode this afternoon. If you are interested in seeing that episode, that'll be later on today, probably about 6 p.m. Eastern Standard Time, 3 p.m. Pacific Daylight Time. So tune in then. I'm going to break down the NASDAQ. We'll see if we are probably the NASDAQ and the S&P, and we'll see if we are in a position now where it's buy time. We definitely hit that target. I had set a target on the NASDAQ for about 354. That was on this last Saturday. It looked to me as though the NASDAQ would hit 354 on the QQQs, and we did, or was it 454? 454. Sorry about that. It's 454 on the QQQs, and it looks like we hit that the other day. So let's see if we're good to go. We'll take a look this afternoon. Let's jump into it. So we'll look at APD and Amazon first. Let me share my screen with you here. All right, here we go. APD. So we're going to go ahead and take a look at a monthly on APD. Is there anything interesting here? I would say that there is. So out of the gate, it looks like we do have something interesting. This is definitely right here, definitely an increase in volume. I would say that your notional average volume here probably sits right about there. Okay, so we've definitely had an increase in volume here. Where have we had an increase in volume? We've had it at the bottom of this range. So as you can see, we have a range. Here, let's put this up here. We got here and here. That's a range. Oh, tap that again. So this is your range. And at the bottom of this range is where we're seeing a lot of this volume, specifically this bar here, which would be February of this year, indicating definite institutional footprints. As you can see, what similar footprints back here did to price. It took 4 or so of these to drive prices from 123 up to 330. So this is a decent. That is long term that we're looking at there. Air product chemicals. Oh gosh, sounds interesting. I'm not sure that I like the sounds of that, but let's take a look at the stock itself. Here we are. So this is a gap down. What are gaps down used for traditionally in a range? So if you're at a range after prices have risen from 130 to 330, and you're at a range at the top and they're gapping prices down, what is that? Typically, that is accumulation of more supply. So they want people to sell out so that they can purchase more. I would say that probably is what that is. But remember, there's also the alternative, which is highs take time. So when a price sits up at a high level for a long period of time and you're able to find big footprints, sometimes that can indicate that price is ready to move down. They're going to knock it back down. Institutional. When I say they, I mean institutional money, big money, the more knowledgeable hands, the strong hands of the market. Okay. So let's take a look if which one of those it is. If I'm looking at that gap right there, to me, I'm saying this is buying. All right. They've been back down here before. This is buying. That is what it appears to be to me. Now, here is that large gap. All right. So a gap, everybody, for anybody who's just tuning in, is a big hole in price. You see right there. There's no price action in between this close of 258 and this open of 218, or the open's 227. So 258 to 227, there's no price action. That's called a gap. So what does price do when it comes to gaps? Well, Sometimes it fills. And traditionally, if you're in an individual position, if gaps fill, and this one did substantially right there, um, it did fill. So when gaps fill, that tells you that gaps do fill in this position. What does that mean? Well, usually if you see a gap down in price on large volume, followed by, I mean, a pretty substantial price increase, going much higher than the gap itself, that would mean that they are looking to pick up supply. So price drops back down into the 245 area. And what do you see? Right around, what's this price? Right around the, just call it 260, 265 area. You see a big piece of trading activity, right? So that's definitely an institutional footprint there. And then price falls a bit more, and then of course it rallies, because that's what institutional footprints will do. They will rally, and then we see another one there, and it rallies as well. So this is starting to look a lot more like buying than it does selling, doesn't it? Let's go into a 4-hour chart. Does the 4-hour chart do anything more for us? It definitely breaks down at these high prices. There was definitely selling in here. There's no doubt about that. But it does reinforce the fact that there is buying at these lower prices. So nothing really, that doesn't really clarify much for us as we get short term. Neither does this. We're on an hour chart. We're going to go down to a 30-minute chart. Let's take a look if we can see what price action. So here we can see a lot of buying down here at the 250 area, 245, 250. That is somewhat helpful when you're sitting at 263. 15-minute. Let's take a look at what we see. Gosh, there's not a lot there. Pulling price down in this range, buying. Looks like, I mean, I mean, this looks like a price ready to rally, but quite frankly, there's not really enough here to say, okay, what do we see coming, in the next month? What do we see in the next 2 months? I mean, it looks like price wants to rally higher. This looks like accumulation. It's not a very exciting chart. Let's just be honest about that. Let's go monthly to Amazon. I know these are stocks that a lot of people are watching every single day, which, can make them exciting. Let's take a look at Amazon. So we've been sitting here stagnant for about 4 months. Anything down there in volume? No. It looks like just a summer lull there. Let's zoom in a little bit here. What do we see? Anything? No. If anything, we've had a substantial volume. Volume has, dried up. We're averaging about volume in this particular position. And what does volume indicate? That indicates trading activity. What does trading activity indicate? Well, it indicates that institutional players, strong hands, are either interested in the stock, in lifting prices, dropping prices. It looks like right now this is just par for course, meaning that it's not being played to the up or down side. It's just business as usual here. We'll zoom in a little bit anyway. That's a weekly. Let's zoom into a daily. I mean, that gap down here. 161 to 165. It's a small gap. This chart does many of them. Remember, when we're looking at charts, folks, what we're looking at is the story of that particular position. All the story is telling us is whether people are actually interested in the narrative, institutional money is interested in the narrative, or uninterested. And with Amazon, uninterested is the answer. There's just not a lot going on there. We need to go ahead now and take a look at Apple and APTV. Let's go ahead and look at that. So we're going to take a look at Apple here. Whew, she's a flyer, huh? This one's flying. Is there any large amount of interest in Apple? I should say not. Weekly, let's take a look. Anything. This is interesting right here. So the week of June 10th is interesting, very interesting. That was the week of the what was it called? That big Apple meeting that took place, the technology meeting. However, price was bolstered there, but it hasn't gone anywhere since. All right. So I don't, in fact, volume is completely drying up at this high level. Let's zoom in. Let's zoom in on that. Apple actually has some pretty big targets, pretty far below us right now. I don't know if any of you are aware of that, but it does. Apple is not just this free flying company. In fact, as you look here, what is this? I mean, you should be able to spot institutional interest in this chart easily. Look at this. Now, let me ask you something. And this is a genuine question for anybody watching right now. If you're looking at this chart right now, you remember what that looked like on the last chart, right? What I want to ask you is this. If you see all of that volume come in at 210, 220, this is again 210, 220. That's the same price. Okay. And then it rallies 10%. And now you're sitting right back in that exact same area. And you're looking at all that activity right there. I have a question for you. On this particular chart, you're looking at prices going back here from what? Call 130. Who cares? It's lower. It's probably 120. You're looking at 120, 130. And right here, all of this activity, this bolstered activity is taking place somewhere between 210 and 220. Doesn't matter where. Do you really believe that institutions are now buying Apple? Is that what you would assume? Do institutions have is their game plan to watch prices rise over 50% or 50% ish, right? It's actually less than 50%. Who cares? 40%, whatever. Is their game plan to watch something rise 40% and then jump in? Come on, I should say not, right? Let's move back onto a daily chart. So you don't need to know all the details. You know that price has risen, 40, 45%, whatever it is. And now you're seeing a large amount of institutional interest, a big institutional footprint right there. Okay. You can know kind of what you think that is, right? Like, I'm not telling you what it is. I'm telling you look at it. What do you think that is? So now as we zoom in, remember that every chart is a new page in the story, right? But unlike other stories, we're just using the background as to give us an idea, to keep us informed to a degree of where we think things are going. But that, we formed a hypothesis, but an hypothesis is just an idea, right? And that can change as we zoom in, zoom in, zoom in. We want to prove or disprove that hypothesis. And truth be told, what I usually try to do is disprove it, because if you can disprove an initial thought, odds are you're going to be correct. It's going to make your opinion bulletproof. If you prove your idea, great. Okay, if you prove the hypothesis, great. Now, what I would say on this 4-hour chart is, and I know that this is a very small gap here, but this is something you want to keep your eye on, all right? And that's down at 174, 175. It hasn't filled, all right? And we're $50 above it right now, which is roughly 20%. So that's something you want to keep your eye on. And remember that price target of 174 as we zoom in, because it's going to disappear as we zoom in. We're going to no longer see it, which is fine, because look what's shown up now. Now you have a gap at a higher price of 233. So every position you take at any given time, you should know your high level and you should know your low level, right? So you should have, that's part of risk management. Hey, I'm sitting at 224. I can see above us there's a potential target of 233, and I see below us that there's a potential target of 174. So there, you can build into positions on the long side, meaning you believe price is going to rise, and the short side simultaneously, can't you? Because if you say, hey, here's my high, this is where I believe it can go in the upwards direction, this is where I believe it can go in a downward direction, to manage risk, you can start building into each of those positions. But let's zoom in and see which direction we think this is going to go. So now we can see this up here. Is this a gap? It is a gap. Is it a big one? No, it's not. Okay. It's really not a big one. So, but you still take heed. You always pay attention to potential price targets, because as you zoom in, as you can see now, it looks a lot higher. What does volume do when you're down here? Sorry, I'm outside and I am being attacked by a mosquito. What is volume doing at the bottom of this range? Look, price has fallen, and this is a range, guys. This right here is a range. Now, I don't want you getting all caught up in ranges and support and resistance. We're talking about a range because a range is important only because of where volume and trading activity is taking place within that range. This range can be blown out so quickly and so easily, it'll blow your mind. If you think support and resistance is a way to trade, wait until a trend reverses on you. Wait until you're wrong. And you'll see a lot of these guys, they'll oh, you just take it out longer. See, here's the new range. Take it out longer. Here's the new range. Someone like that's getting eaten up every day. And when a trend reverses, they're toast. So ranges are important because right now it says, okay, there's buying at the bottom of the range. So when you see trading activity at the bottom of a range, it's traditionally buying. When you see trading activity at the top of a range, it's traditionally selling. This resistance, just because resistance is broken through, does not mean it's a breakout and price is going to run. There's as many false breakouts as there are legitimate breakouts. So don't even get me started with that. Bottom of the range, we see trading activity, trading activity, trading activity, and trading activity. Now, what do we see here? Well, boop. We see a bunch of trading activity, and then price breaks through what would be considered resistance. Is that a positive thing? I would say yes, because it looks to me as though there's a lot of buying down at 216. You finally had someone of some substance took interest here at 222. Now you're sitting at 224. Price looks like it could continue to run, and you're looking up here at the 233 range from 224, $10, 8%, 8.5% or so. Let's zoom in a little more. That's still just a 30-minute chart, guys. You're not looking to play that in the next week. So we zoom in a bit more, 15-minute, anything here. It's just zooming in on what we've already seen. Let's get down to a 5-minute. Now, once you get down to a 5-minute, what do you notice? Now you notice this. What do breakouts traditionally do? They suck people in. See, you know how many people had their level set right there for that breakout? And I just talked about false breakouts, didn't I? You know how many people had their level set for if that broke out to buy more? Which is, I imagine, going to be a very, I imagine this is going to be a high volume situation now that it's broken out. Now, if I were looking at this position, and I am, I would say that odds are is it comes back down to 220. Now, if it comes back down to 220 and you're at 224, you're looking at less than a 2% move. However, you're on a 5-minute chart. That should happen really quickly. We know we have a high of 233 above us and a low of 274. Now, what we want to know, if we're doing a proper evaluation of a tech stock, is what does the NASDAQ look like? Does it look like the NASDAQ continues its price rise, or does it look like the NASDAQ hasn't hit the low yet? Well, I'll tell you this afternoon, but it sure would help you with Apple. It'll help you with anything. If you don't know the direction of the underlying index and you're playing the positions within it, boy, are you making a mistake. You are making a mistake. I can tell you the last Saturday, 454 looked like about the number that the NASDAQ was going to have to hit. The QQQ ETF was going to have to hit before the NASDAQ was able to rally. It hit that mark, and yesterday rallied about 3%. So again, a very accurate forecast. It's not about tooting your own horn. It's about understanding where the underlying index is going. Now, just because I was looking at 454, that was it needed to get there price target, not from there. It's just going to take off. So if you're looking at Apple right now, short term, you say to yourself, well, I have 220 that's in the immediate range. I have a high of 233. That target is a heck of a lot closer than that 174. And that 174, for this thing to fall $50, which in this case is, roughly 20%, about 18, 19%, you're going to need the index itself to have a pretty big correction. Are we in that scenario now? No, we're not in that scenario. It does not look like we're in a scenario that the index is going to have a major correction. But we don't know because I haven't broken it down just yet. That gives you an idea of how you actually formulate a decision on what to do when you see something that has several price targets like Apple does. We have a very near term, but just below us, about 1.5%, 2%. We have a closer term that gets us to 233, and then we have a long term down at 174. If you're playing the position correctly, you should be playing short, intermediate, and longer term plays. Okay. And that would all be taking place in your short term portion of your portfolio. You also have a long term portion of your portfolio where none of what I just said matters at all. Does that make sense? I hope so. Okay, so here we go. We're going to cruise through APTV, Ball, CI, and ES because I just spent a lot of time on Apple. I thought that was a good one. That was a fun one to look at, and it was a fun one because it had several price targets. And I wanted to lay out to you, what do you do in a real life scenario when you manage money? And what I just explained to you, before you go into any position, you must know all of that. Here we are, APTV. This looks like down here. This looks like activity of institutions. Let's zoom in. Let's see what it tells us. Anything. Oh, that is definitely interest. That is institutional interest. Zoom in more. Now, I can break all this stuff down much, much quicker than you watch me do. So here we see a breakout on volume. This is a price gap down on volume. And here we are today with a big gap up. Let's zoom in. 4 hours. What do we got? Oh, my goodness. And this loves to fill gaps. Look at that. Here's a gap back here. And everybody got all excited because it ran up. But guess what? You had to fill the gap. Price comes up, gaps down. Guess what? Fills. Gaps down. Guess what? Fills. So now we have another big gap. What do you think's going to happen? Come on, anybody. Gaps fill. What's going to happen? Gaps fill. That's what's going to happen. How quickly do they fill on this particular chart? Well, it depends. Okay, gap fills. Gap fills. Here we have a gap. Has it filled? Well, you could argue yes, really. And now you have a giant gap from $79 to $70. Wow, my goodness, huh? Up 14%. You got to love that. If you're sitting there, if you own this and you're not selling it, wow, I can't imagine what your thought process is. So here we are in a 30, 15. Does that mean this fills overnight? You should have your own risk reward on positions like this, okay? This is not something that has to fill overnight. You should know what position size you take, how you build into that position size, because I hate to be the bearer of bad news, but that will fill. You're probably looking at 71. Here we go. Let's do a text. All right. So we're doing 8/1/2024. Get out of here. I'm sorry, I'm being swarmed by this mosquito. APTV. Target. 71. When? Give it a month. 2024. Target date. Now, how can you be so confident about dates? In the summertime, you can't because trading is slow. But what I can tell you is you know where positions are heading. And for some of you, this would be a position that you would treat in the long-term portion of your portfolio. And for some of you, this would be, you don't even have a long-term portion. I don't know why, because for taxes, that makes sense. But this would, some of you are only working in short-term, right? However, within your short-term portfolio, you're doing several things. You should have like super short, intermediate, and long-term in your short-term, right? Now, what did I say is next? 25. Okay, we're gonna do ball CIES. Let's see, ball. Nope. CI. Whew. I like that this was the this was 2021 to 2022 proof. It didn't really take part in that pullback. We're gonna zoom in on CI here. Weekly. A lot of buying at 280. Daily. Anything? Nope. Any targets? Yep. Up here at 350, 330 to 350, you're getting 20. You're getting 7% right there. It's down 4% today. Let's zoom in. I'll just go straight to 1 hour. Okay, we're gonna do 15-minute. Right. Let's look at this. This is high 337, low 324, 331. What's this one? High 349, 347, 348. There is as much buying as there is selling. We're going to say that this gap is going to fill. This will be our last one for the day. This gap will fill. This one should fill pretty quickly, it looks like. So you're looking at 348 right here. So let's give it CI dollar CI of what I say 348 348. Whoops. 348 8/1/2024. And then let's do target date of I don't know, 8/15. That's fine. 8/15/2024. There we go. And I believe that's going to be the last one I can do for today. Remember, my students that work with me one-on-one, we run through their positions on a weekly basis, and we take a look at what they're doing. And my students, some of my students are actually firms. They're RIAs. So I run through portfolios, and my students choose what we are looking at. So if you have more positions that you'd like to see, or you'd like to see positions on a regular basis, remember that my one-on-one students get that consistently. So remember, if you're not good up here, you're not good anywhere, guys. Come on, you got to keep this going right, going well, staying positive. So what do we? Oh, let's stop the share. There we go. Yeah, if you're not good up here, you're not good anywhere. Listen to me. If you're having a rough day, you're going to get through it. You've not failed yet. How do I know? You are still here. Smile. Sometimes you got to fake it till you make it, baby. All right. Get out in the sunlight. Go for a walk. Do anything that lifts your spirits. Thank you so much for tuning in, everybody. I look forward to. I'm gonna do a second broadcast today, this afternoon, breaking down the Nasdaq and the S&P. Is that price drop